Okay, good morning and welcome to Chaikin PowerFeed, your daily market digest. Today is Monday, June 11th, 2018. I hope that everybody had a great weekend. My name is Dan Russo. I am the host of PowerFeed TV. I am the chief market strategist at Chaikin Analytics. You can follow me on Twitter at DanRusso_CMT. And today and every day, PowerFeed is brought to you by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. You can get your free daily Chaikin PowerFeed at www.chaikinanalytics.com/PowerFeed TV. So, jumping right into it, U.S. equities finished higher last week with all the major indexes up over 1%. Consumer discretionary and materials were some of the best performers. The former was led by a big rally in retail, while the latter saw, a broad-based strength. A lot of the chemicals names doing well. I highlighted that in my note to Chaikin Analytics subscribers last Friday. Also saw the copper names doing well. Financials had a good week with the banks taking advantage of a higher yield backdrop as well as some cyclical rotation. And the utilities, as I've been pointing out, they were the only sector to finish lower. Technology lagged despite the second largest inflows on record. Treasuries were weaker. Trading last week was very volatile in treasuries, but they were weaker. Yields managed to close back near the 2.95% level. Dollar index taking a pause and an uptrend. We'll touch on that a little bit. Gold gained 30 basis points and WTI crude slipped 10 basis points. So let's kind of look at the chart here. As I said, breaking out of the consolidation, it's still a question mark. I think the odds favor that we're going to break out of the consolidation and resume the secular uptrend. Support comes into play at the former resistance level at 27.41 and below that at 27.10. And then within that zone of former support and resistance in the 26.58 to 26.75 area. And you have the rising 200-day moving averages at 26.47. Resistance for now, round number 2,800. Also a confluence of Fibonacci extensions and other resistance levels. Don't have them on the chart here, for risk of crowding it out. However, I do think that ultimately we're going to make a run to that 2,800 level. Maybe we'll see a pause there and then ultimately a breakout. And here's why. You're starting to see momentum shift to bullish ranges. Notice that the move up through 27.41 was confirmed by higher highs for the RSI. And just look at the Chaikin money flow indicator. I mean, this is near three-month highs here. This is a sign that institutions are in fact coming to the market. So with the RSI in the process of shifting to bullish ranges, the Chaikin money flow indicator solidly positive. I think odds favor a move to 2,800 and ultimately through that level as the secular uptrend in stocks resumes. Your market in a minute. PowerFeed subscribers get this every day. As I said, all major indexes close higher on the week. The S&P 500 closes over key resistance at 27.41. 10-year yield, despite the volatility, rises to 2.94% to close the week there. Continued dollar strength is a positive for small caps in our review, and futures point to a flat open today. So looking at the power bars, we can see that for the most part, really with the exception of the Dow, the power bars are now all skewed to the bullish side. Dow, 4 bullish or very bullish stocks, or 7 bearish or very bearish stocks. But again, the Dow Jones, as we all know, is only 30 stocks. Let's look at the major indexes. S&P 500, 96 to 92 bulls to bears. NASDAQ, 20 to 12 bulls to bears, as that move continues to shift in the positive direction. Small caps, so a little bit of a pullback, a little bit of a contraction in bullish stocks from Friday to today, but still solidly bullish by more than 2 to 1. 589 bullish or very bullish stocks for 252 bearish or very bearish stocks. Did see that downtick in bonds, sending yield back to 2.95%. And consumer staples actually had a strong day, a little bit of a relief rally on Friday, up 1.23%. But I mean, do we really want to touch this group at this point? 1 bullish or very bullish stock for 14 bearish or very bearish stocks. So according to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish and the major indexes are mixed. The Dow is negative. Everything else is skewed to the positive side. So your stock of the day, we actually touched on this one a couple of weeks ago, Reliance Steel. RS is the ticker symbol there, closed at 95.60, down 20 basis points on the day. Does have a very bullish power gauge rating, and the power gauge rating for Reliance Steel is very bullish due to very strong earnings performance, very positive expert activity, and attractive financials metrics, and strong technicals. So Those are the factors that roll up to give us this very bullish rating. So let's take a look here. Very bullish stock, strong trend in a strong industry. Moving to the bottom of the chart, we can see where the ribbon has been. And this is interesting. I like to see this progression, right? Neutral to bearish kind of a year ago, shifts to neutral, and now it's predominantly bullish, with some bouts of neutral, but mostly bullish. And been outperforming the market since December. So this is what we're looking for, right? You hear us talk about it all the time. We're looking for bullish and very bullish stocks that are outperforming the market. That is a powerful combination that lets you know you're on the right track as far as your idea is concerned. And now you got to take a look tactically, do we want to own the stock here and now? And our overbought, oversold indicator is closer to oversold than it is to overbought. It is rounding up, and Chaikin money flow is bullish as the stock has moved higher from the 80, 82 level to 95. We are on the verge of a breakout through this $95 to $96 level. I think this is a name that you want to own. I think, depending on how aggressive you are, me personally, I'd put on a starter position here and then buy it on a breakout through $96, $97, put on my full size. But also, the reason I would only want to have a starter position here is we are kind of up against resistance, and I'd want some dry powder for a pullback to this rising long-term trend line. I think Reliance Steel is the type of name that you want to own, but how you build the position obviously is unique to you. I can walk you through how I would do it. I put on a starter position here. This way I have some dry powder for a pullback to the rising long-term trend line, but I also would not be afraid to add to that position on a move through resistance, $96, $97. RS is the type of name that we want to own here based on our process, though. So moving now to the sector tracker. Let's take a look at how the sectors have been moving over the last 5 days. Discretionary has just been really strong. You heard us talk about it earlier in the show. Retail names really starting to move up and out, and that's a theme that I've harped on for a little while for Chaikin Analytics subscribers. I've called it the retail renaissance. You've heard me talk about it here, where retail stocks at the end of last year were left for dead. Really priced like they were all going out of business. Like Amazon was just going to drive anything with a retail presence to zero, and it just got overdone. The sentiment got too overdone to the bearish side, and now those names are working, and they're starting to put up some decent numbers. So discretionary. Outperforming staples, so that's a sign of risk taking in the market, and the fact that retail is doing well has to be viewed as a positive for the market here. Materials, second best performer over the past 5 days. Last Friday, for Chaikin Analytics subscribers, I called out the chemicals group. I thought that looked interesting. Lyondell-Basel, LYB, was the name that we liked there. You can see the kind of the counter trend bounce in staples. I don't think that's going to last. I think you can use strength in the staples to sell the weakest names. And you can see now towards the bottom of the list, utilities had a horrible week. You've heard me talk about my bearish view on real estate, utilities, and staples. I think any strength in those groups can be sold, and you were rewarded for selling strength early last week in utilities. That has been the worst performing group over the past 5 days. Energy is kind of a mixed bag for me. I think the E&P names are going to struggle as oil pulls back to the $60 level, but I think that the refiners could do well in that environment. Technology, we want to see that group do well. Don't like seeing that in the bottom 3 performers. Our industry in focus: pharmaceutical services, skewed to the negative side based on the Chaikin power bars. 9 bullish or very bullish stocks for 12 bearish or very bearish stocks. And over the past 6 months, the pharmaceutical subsector has underperformed the S&P 500 by 4.2%. Its power bar ratio, as I said, which measures future potential, is weak, with more bearish than bullish stocks, and it's currently ranked towards the bottom, right? Number 17 of the 21 subsectors that we look at. It has moved up 2 slots over the past week, but not really where we want to be looking for long ideas. In fact, you might want to look to prune names from your portfolio if you own them, or actually look to open short ideas if that is how you invest. And some of the indicative names in the group, all with very bearish Chaikin power gauge ratings: Dermira, ticker DERM, CymaBay, CBAY, and Theravance, TBPH, all with very bullish Chaikin power gauge ratings. Let's look at one now. CBAY, CymaBay Therapeutics, ticker CBAY, very bearish Chaikin power gauge rating, closed at $12.89 on Friday. It was up 4%, so maybe you can utilize some strength as the trend is still weak and the industry is weak. Very bearish stock. Let's kind of take a look here and see if it makes sense to get this name out of the portfolio or potentially open to the short side. And I'd say not right now. I'd say, you have this very bearish power gauge rating. However, the stock is still has been outperforming the market, and it's closer to oversold than it is to overbought. But this is what's interesting, and this is kind of a stealth signal as far as I'm concerned. As the stock has gone sideways since April, institutional investors have actually been selling the stock. You can see the bearish Chaikin money flow readings here. This to me is a sign that institutions do not want to own this stock. I think that as long as we remain below the long-term trend line, give the indicator some time to work back up to overbought conditions, and then utilize that as an opportunity to get the name out of your portfolio if you own it, or open a short position if that's what you do. However, as always with these kind of smaller biotech and therapeutic companies, before you trade, be aware of what they have in their pipeline, and be aware of potential catalysts, some PDUFA dates or FDA announcements that could drive stock trading in that name. Always do your due diligence before putting on a trade in any trade, but in particular these small and mid-cap biotech stocks. Trending over the past S&P 500 on Friday, Monster, Allergan, DHI, Pulte all gained. But the weak side is kind of where I want to focus today, because Skyworks and Avago trading down, not something we want to see, right? We want to see tech do well. We want to see semiconductors do well. You've heard me talk about it. To see these two names on the right side of this screen bothers me. Noble and HP, two names in the energy space, which showed weakness. You've heard me talk about it. I mentioned it earlier. Bifurcated view in energy right now. I think that services and EMP are going to be weak. I think refiners could be strong. MGM, a bearish stock that closed down nearly 2%. But take a look here. Allergan, AGN, very bullish stock, up 4%. You probably want to do more work there if you don't own it, right? Strong move in a very bullish stock. That's something you kind of want to keep an eye on. Now, kind of getting through some of the key themes that we're talking about. It's Monday, so in my note to Chaikin Analytics subscribers, I look at key themes across asset classes. We touched on the S&P 500. Look at yields here. They bounced from the 50-day moving average. They remain above support in the 275 to 285% zone. The 200-day moving average is at the key breakout level of 2.6%. You've heard me talk about that in the past. I think as long as yields rather are above 2.6 to 2.62%, the path of least resistance is higher. I think ultimately we're going to head back through 3%. Look, the RSI has kind of retaken or gotten close to retaking this 50 level. I think the move higher in yields is going to be beneficial to the banks, especially the regional banks. I think it's going to hurt the utilities. I think it's going to hurt the real estate group. Continue to see yields moving higher. That's our base case view. However, it is not a negative for the market overall. You've heard me talk about this in the past as well. I think as long as we're under 5%, rising rates as a sign of a strong economy is bullish for the market overall, but bearish for the bond proxies. We've touched on that in the past. Feel free to reach out to our team if you'd like me to go into it further. I think the dollar here is pausing within a new uptrend. It's pulling back from overbought conditions. You can see the RSI here got overbought over the past month or so. It is above the rising 50 and 200-day moving averages. The RSI remains in bullish ranges. As we've traded off here, Chaikin money flow has turned negative. I don't like the sight of this. Hopefully it will be short-lived. I think a resumption of the uptrend, however, which is my base case view, is likely going to be a positive for small cap stocks. Stronger dollar favors small over large. And small cap stocks here, they are breaking to all-time highs last week in a move that was confirmed by momentum above a rising 50 and 200-day moving averages with strong Chaikin money flow. Would not be surprised to see a little bit of a pause here just given the overbought conditions, but we continue to favor small cap stocks over large cap stocks. And looking now at the sectors, healthcare and tech remain at the top of the list, but look what's kind of creeped up. Materials, discretionary, and energy all leading relative to the S&P 500. The bottom of the barrel remains the same. Real estate, utilities, industrials, and consumer staples. In particular, I think you want to be underweight the staples, the utilities, and the real estate as defensive groups and bond proxies come under pressure as the market continues its secular uptrend. So that's kind of it for today. I hope that everybody has a great day. As I said, I hope you have a great weekend. Thank you to stockcharts.com. As always, you can get powerful, profitable stock ideas and more. www.chaikinanalytics.com/PowerFeed TV. Have a great day, everyone.